This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello and welcome to the Global View on this Friday. I'm Andrew Gagan, good to have you with us again here at AusBiz. Let's check what happened overnight on global markets. And they rose while oil prices surged after the Trump administration imposed sanctions on major Russian energy companies. On Wall Street, investors weighed up mounting geopolitical concerns with positive earnings results, with sentiment improving on confirmation that President Trump will meet Chinese President Xi Jinping next week. Major indices finishing positively. Stocks, specifically Tesla shares, rose after the EV maker extended its streak of profit misses to a fourth quarter, even as sales hit record highs. Intel forecasts fourth quarter revenue just shy of estimates, would beat expectations for September quarter profit amid cost-cutting measures and a slew of high-profile investments in the company. IBM reported a slowdown in its key cloud software segment, eclipsing its earnings beat, and Honeywell raised its annual profit forecast on strong aerospace demand, sending its shares higher. American Airlines soared after the carrier raised its annual profit forecast, while Southwest Airlines dipped despite posting a surprise quarterly profit and record current quarter sales. T-Mobile fell even after the telecom's wireless subscriber ads surpassed analyst expectations. And quantum computing firms rose on reports that the Trump administration is in talks to take equity stakes in them in exchange for federal funding. And the energy companies were buoyed by spiking crude prices, while independent oil refiner Valero reported better than expected third quarter profits. In the UK, Unilever said it was outpacing its competitors in the United States, driven by double-digit sales growth from beauty brands. And in Europe, Renault beat third quarter revenue forecasts, while Volvo smashed third quarter profit forecasts, sending its shares soaring. Well, President Trump and Chinese President Xi will meet next Thursday on the sidelines of the Asia-Pacific Economic Cooperation Summit. The meeting in South Korea will be the first face-to-face since President Trump took office in January, and comes ahead of the tariff deadline he's imposed on China early next month. Meanwhile, the US has announced sanctions on Russia's biggest oil producers, with the Treasury Department blacklisting state-run oil giants Rosneft and Lukoil because of what it says is Russia's lack of serious commitment to a peace process to win the war in Ukraine. The new sanctions were unveiled after plans for a summit between President Trump and Russian President Vladimir Putin was scrapped, with the American leader saying it didn't feel right. And the European Union has adopted a new package of sanctions which also target Russia's energy infrastructure. Well, US Treasury yields have risen, boosted by the surge in crude oil prices. The 2-year rise into 3.48%, the 10-year was up to 4%. And the US dollar up slightly on the day, the Aussie dollar trading at 65.1 US cents. So oil prices surged around 5% to a 2-week high following the US imposed sanctions on major Russian suppliers, which has prompted energy firms in China and India to consider cutting Russian imports. Brent futures are up close to 5.5% at $66 a barrel. Copper rose 2%, iron ore up slightly to 105 US a tonne, and the gold price rose around 1% on renewed geopolitical risks, which has bolstered safe haven demand. Spot gold currently around $4,120 an ounce. And Bitcoin is trading higher, close to 110,000 US dollars. Well, let's get more on what we're seeing in the energy sector at the moment, particularly ahead of quarterly results. Stewart Glickman joining us from CFRA Research. Stewart, welcome back. Good to see you. Let's start with those geopolitical moves we've seen, having the US announce those new sanctions on the Russian producers. What effect do you think that is likely to have on the broader market?
Hi, Andrew. Great question. So I think on paper, these sanctions should be more influential on oil prices than the prior ones have been. And that's because these new sanctions go after specifically Rosneft and Lukoil, which comprise around half of Russia's crude oil production. Prior sanctions have really been going after those kind of secondary and tertiary players. So this is more of a full frontal assault on Russia's oil machinery, if you will. I think whether it has staying power and oil prices move up depends on whether or not Russia is able to sidestep these sanctions. That remains to be seen.
Well, also, I guess, as I mentioned there, whether China and India, the two of the biggest buyers of Russian oil, actually heed those sanctions.
Yes, absolutely. So with oil prices, largely having been in a downdraft over the last, call it 3 months, maybe China and India say, you know what, we have the luxury now of perhaps going for other sources of crude oil and avoiding Russian crude. To be fair, Russia's really good at sidestepping sanctions. It's sort of a state-sponsored cottage industry, and a lot of the EU efforts that just came out in the last couple of days are deliberately going after those as well. So adding, I think it's something like 25%, and a 25% increase in the shadow tanker fleet that is now blacklisted, as well as efforts to not provide insurance for vessels that have just recently changed hands. There's a spider web of ownership of these kinds of vessels created on purpose to try to obfuscate where the oil is coming from.
Stewart, do you think this will be enough to alter the downtrend in the oil prices, or does that remain intact, particularly, I guess, given you've got that excess output from OPEC, plus overall a sluggish global demand?
Yeah, it's a good question. I think even if you could argue that the sanctions are going to be ineffective, I still think there's an argument to be had that oil prices move up anyway. And I think it's for two reasons. Number one, OPEC Plus has proven itself over the last roughly 5 years to be pretty disciplined on production growth when it wants to be. And so it would not shock me if OPEC Plus were to reverse course and undo some of the anticipated barrels coming back to market. The other reason I think that might provide an uplift is U.S. oil community has really kind of chronically underinvested in new oil field development over the last 3 to 5 years. I think a lot of I think a lot of oil that's being produced today in the U.S. Is at risk of rolling over and starting to see a bit of a decline. So for those reasons, I do think there's a chance that supply will not be quite as much of a glut as some seem to be fearing.
Well, Stewart, let's get to CFRA's earnings preview for the third quarter for the major US oil producers then. What are you looking for, given I see you're essentially saying that the past 12 months have largely disappointed?
Right. So commodity pricing has kind of taken a hit, Q3 of 25 versus Q3 of 24. So spot prices are down for crude oil, particularly around 13-14% on average year over year. And so because liquids dominates the production profile for most of the coverage that we have, we do expect that most producers are probably going to post year over year declines. Of course, that's baked into expectations anyway. I do think you're going to see continuity on the dividends. I do not expect to see companies slash dividends in this kind of pricing environment. I do think you may see buybacks being trimmed because some of the largesse that helped fund buybacks a year ago and even a few quarters ago probably won't be there this time around.
Can you, I don't have a lot of time, but can you perhaps just run through a couple of the majors there in Chevron, Exxon, perhaps Conoco and Occidental?
Sure. Okay, so Exxon, we have a 4 stars with buy opinion on. Strong volume growth coming out of Guyana, fortress of a balance sheet. A little oilier, less gas influence than a Chevron does. We're not quite as optimistic on natural gas prices. So for that reason, we only have a 3 stars or hold opinion on Chevron. Conoco has been kind of struggling of late. I think there are concerns about potential cost overruns for Conoco with their Willow project offshore Alaska. We only have a 3 stars or hold opinion there. And then lastly, Occidental Petroleum. Oxy is over levered compared to peers. They just recently made a deal to sell off their chemical unit OxyChem to Warren Buffett and Berkshire Hathaway. We think it's a great purchase by Berkshire Hathaway. We do not like the timing for Oxy. They're selling at probably a 3-year low on chemical profitability, but Oxy needs the cash because it's over-levered and it still has dividends to support.
Stewart, terrific to get your analysis. Thanks so much for joining us on CFRA Research.
Thank you.
Let's preview where we're likely to start locally. Just perhaps a modest start there, higher 6 points, in fact, SPI futures pointing to. And look, also be focused locally on quarterly updates, particularly among the miners. We get some updates there from PLS, Newmont, Whitehaven, Coal also. A number of AGMs to get across as well. Join us for that in just a couple of minutes.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.